Hey guys, welcome back to the Independent Investor channel. You know, when the stock market really starts to get cranky and crank up on the volatility, you know, it scares a lot of people out of the stock market. And those tried and true investors, honestly, this is the time when you really want to calmly take a look at the market, maybe step into a few positions as opposed to panicking and exiting the stock market. Guys, if it's your first time tuning into the channel, subscribe to the channel. I'm going to be going over my top investments for March of 2018 in this. I'm going to offer you 12 picks from different segments of the stock market that I feel really, you know, when the stock market goes down, it doesn't matter how quality of a business you have, you're going to get dragged down, you know, with the momentum in the stock market. And I think, unfortunately, a lot of people think that they've timed the market incorrectly or they've invested in the incorrect stock. None of that's true. It's just that you entered into the stock market at an unopportune time. I think that's a little more fair, right? But if you get kind of stuck in that, you need to look at not panicking and exiting those positions. You really need to be looking at maybe adding to a position that you've been looking at. And that kind of calls into question the importance of monitoring the stock market. I'm interested in the topic. I monitor the stock market. I'm a student of, you know, finances and kind of evolving my own education. So I offer these stock picks really just as a product of the self-study that I do. I offer these products just as entertainment only. So please, I encourage you all, anytime I do any of these top 3 stock picks of the month or stock picks, we do them for fun and we do them for entertainment purposes only. But certainly I do look at these as credible investment cornerstones, and I'm going to offer these in 4 different segments, all right, for investing options that have really been drugged down in March. It's really been a nasty month altogether, with a blip of hope there kind of somewhere at the beginning. But I'm going to offer my top 3 really, and these are going to be, I refer to these as cornerstones in any good portfolio. So if you guys have a nice diversified base in your portfolio, a lot of people are hitting me up and they've got a good 401k base. Certainly those have adjusted back a little bit. It might be a time to look at upping contributions. That's when you need to kind of reverse your thought process, right? Instead of saying, oh my gosh, I'm not investing in the stock market, it's crazy. You need to reverse that thought process and say, okay, when everybody else is running for the hills, you're the one that's actually stepping in and strategically devoting more to the stock market and participating in the stock market while stock prices are recessed, all right? So the 3 that I'm going to offer you from the cornerstone perspective, these are stock picks that you can add to a diversified base. If you're working with a diversified 401k or TSP in your account, or you own a self-directed account and you've got a good diversified base in any of the good ETF products or index funds that I offer through Vanguard, certainly you can look to strategically put smaller positions into cornerstones and start to build up those cornerstones over time of good blue chip stocks. And the 3 that I'm going to recommend are right out of the Dow Jones Industrial. The Dow's really been beat up, and these good quality companies have been dragged down with it. My number 1 conviction buy is Disney, no doubt about it. The valuation has dropped below 14 for its price to earnings ratio. We've got across the board buy ratings. They're actually starting to kind of put this ESPN debacle behind them, which has really punished the stock. No doubt, and I think really kind of unjustifiably. I really do. I think with Bob Iger extending his contract, really kind of it provides that consistency with Disney. But I've been a long-term holder of Disney. I really don't care day to day or month to month or quite frankly year to year what Disney does. But if you guys are looking to buy Disney right now, you may reflect on this opportunity because it's not going to be around for very long. Below $100 with this valuation. Disney at $97 a share is an absolute buy. 10 shares puts you into a $970 position in the stock. Absolutely a wonderful cornerstone in any portfolio. Number 2, Exxon Mobil. Exxon Mobil has just been crushed. It's down into the sub-70s right now. Great position to pick up 10 shares for yourself if you guys are working with smaller portfolios. Certainly to go ahead and put yourself into a buy position, pick up 10 shares, maybe even if you're working with a smaller portfolio, cutting in half, $350. You know, buy you 5 shares of Exxon Mobil. You can enjoy a 4.25% dividend on Exxon Mobil. one of the biggest companies in the world. Saudi Aramco is actually the biggest, but they're not public. Exxon Mobil is the biggest public company, one of 2 Dow stocks that trade. I own both Exxon Mobil and Chevron, as well as Royal Dutch Shell. I recommend those on this channel all the time. Certainly, if you're looking to get some exposure to the energy sector, now is a good time to look at stepping into Exxon Mobil. Enjoy the dividend while it's continuing to get drugged down just like everything else, but oil's starting to stabilize. The question you really need to ask yourself is, do you think that oil's going to 40 or is it going to 80 or maybe even beyond? I believe it's more of the latter. So now's a good time to pick up your 9%, a little bit of exposure in the energy sector. The last one out of the Dow composite is Coca-Cola. I've owned Pepsi for years. I just picked up a position in Coca-Cola. It spiked, got above 50 there for a short time. It is in the sub 40s now, again, being drugged down. It is a diversified snack and beverage play. It's not just all about Coke anymore. Coca-Cola can really get it done for you. Excellent dividend payer. It's paid back dividends for their stockholders over time. I certainly don't mind putting that out for you guys. If you want to add a little bit of exposure to Coca-Cola, please do that. Add that cornerstone to your portfolio, because again, these buying opportunities really don't come very often. If we get an upswing in the market here come this week, the end of March, we're going to see all these good quality stocks get picked up on a bargain right now, guys. And I do want to offer 3 of my very favorite ETFs. The 2 that I offer all the time right now, VOO, those who have participated in the S&P 500 index fund from Vanguard, experience an expense ratio of 0.04. It's the lowest in the industry for such a quality ETF. There are lower. I've been hit up with a lot of questions of, I can buy free ETFs in my brokerage account. Yes, but you need to look at the expense ratio that's being charged on that. They're going to give you the ETF for free if it's a crap ETF, all right? You're going to have to pay up a little bit, but there's no better product to get exposure to the S&P 500 from a diversified perspective than VOO. That is Vanguard's S&P 500. Pick up a 1.7% yield every year that you own it, and that's one of those products that you buy and you hold forever. You're getting a good entry point right now on the S&P 500 with the reduction in the stock market here recently, all right? VTI, same category. You're getting an 8% year-over-year rate of return since inception. It's been around since the early 2000s. It diversifies you across 3,600 stocks, guys. So I know a lot of you guys hit me up and say, gosh, VOO and VTI are really expensive. It's not like that. It's not buying a stock for 140 or 250 respectively. You're buying the entire index. So for each block of ETF that you own, basically, you own a piece of that index, all right? So you really have to kind of be careful. ETF investing is not the same as single stock investing. And these give you that diversification that you would expect. And the track record proves it, guys. You're really only looking to get that 7 or 8% rate of return in a tax-protected and a wealth-preserved account. All these ETFs will get it done for you. And the last one is VYM. VYM is Vanguard's dividend ETF, and it is a fantastic, it's almost a 10% year over year. Yeah, now you will pay 2 basis points more in that at a 0.08 expense ratio. I think it's worth it for you guys who are looking for dividend exposure but don't want to buy single stock. VYM has a nice yield of around 3%. Will pay you per year to own the ETF. It basically holds a basket of all of your major dividend players in VYM. So VOO, VTI, and VYM, all products from Vanguard. No need to stray away from the best. I offer nothing but the best on the Independent Investor channel. Now, FANG. FANG has been whipped. I am stock owners in all 3 of these stocks. 6% of my portfolio is weighted in all 3, Facebook, Google, and Apple. If you have an inkling and a risk tolerance greater than a basic investor, or excuse me, a beginning investor, certainly now may be your opportunity to go ahead and take a bite of the apple, or get some exposure from an aggressive perspective in Facebook, which I consider one of my most aggressive holdings, as I'm a basic investor. I'm not an idiot, okay? I don't like to see my money fluctuate up and down. I like to invest in good quality companies. Facebook is just that. With a market cap of over $500 billion, guys, it really doesn't get any better than Facebook, who basically owns ad revenue space. And quite frankly, companies have to do business with Facebook. And with the money that they're making, 40% margins on their money, Facebook is an absolute bargain. It's being whacked right now. It's being punished for their data scandal. Certainly this should generate a lot of comments in my commentary section. If you think I'm off my rocker and Facebook's going to zero, we will see from here. I own 75 shares of Facebook, just around a $12,000 position in the company, around the same amount in Google actually. But if you guys are looking at entry points on some of these good stocks, Apple being one of them right now, Apple probably being the #1 stock I recommend more often than not as one of those pillars in your portfolio. Really, Apple is one of those. If you were going to not own the other two in the ad revenue space, certainly look at Apple right here as a good entry point to go ahead and invest for the long term. Now, the last three that I'm going to recommend are just some bonus picks that I'll throw out there that have absolutely been crushed. All right. Now, I own all three of these names as well. So I've been crushed as a stockholder. I'm fine with it. It's fine. I'd rather own the names than panic and be out of the names. But I'm going to offer these three to you guys just as some bonus picks to do some homework on your own and kind of validate for yourself. These might be on sale right now in the stock market. First of all is Kraft Heinz Food. I love the acquisition that they made with Kraft Heinz some few years ago. They have been absolutely crushed. They had a very poor quarter with products. Kraft Heinz will survive the test of time. Guys, they have such a wide moat. You cannot go into any restaurant and find anything other than Kraft Heinz ketchup on the table, guys. There's no reason to believe that this 20% downturn in the stock is all justified, okay? Kraft Heinz will and has been a quality company for years, and it will continue to be that. Pays a nice dividend while you're looking to wait this storm out and wait for it to kind of find its bottom. But this might be a really opportune entry point for Kraft Heinz Food. Second, China Mobil. China Mobil is a stock that I've recommended on this show. I don't recommend any more than 3% of your total overall holdings in telecom. China Mobil at $45 is an absolute steal. The price to earnings is getting close to 10. It doesn't get any better than that. Comparatively speaking to its other peers out there in the industry, which quite frankly, China Mobil deserves a superior multiple. Right now, they are getting a discounted multiple at around an 11 or a 12 PE. At $45 a share, guys, you could pick up 10 shares of it for $450. Get paid the 4% dividend while you wait for this thing to find its bottom as well. The last thing I will offer, and I hope this stirs a lot of controversy because you have to think outside the box every now and then. We call it contrarian investing. And I tell you what, until a stock just gets completely washed out, there's not going to be anybody jumping on the bandwagon to actually buy a name like General Electric. And General Electric right here at $13, guys, it might be the most intriguing buy out of my entire list, because if we have one hint of positive news come out about GE, it's going to be above 20 like that. Guys, thank you so much for tuning in to my top investment ideas for March. I thought I'd offer everything from different segments of the market that I'm looking at. I did away with the top 3 stock picks of March for this time. I thought I'd offer a little more holistic because really everything has been crushed over the last month, and I thought I'd offer you guys some really good entry points. If you're out there and you're tempted to get invested in the stock market, this might be a really good entry point for you to kind of trickle some dollars into, get your account started, and start to trickle some starting positioned into some of these names and start to enjoy some of the benefits of being an investor over time. Guys, if it's your first time to the channel, subscribe to the channel, leave your comments at the bottom, share this information with anybody out there that you know that can benefit from the information. Guys, thank you so much again for tuning in. Good luck in your investment future.